Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're at Monday, August 17, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today, folks, in the markets, we had some news that came out of Asia. We're going to do them first because what we had from Asia, we had first of all the... Where's the Asian market here? I think it's around there. Yes, so let's start with the Nikkei. Nikkei today, we had the GDP reading for the second quarter. It shows that the economy has contracted by minus 0.16%. If ever there's another quarter that is, again, negative, Japan will be again officially in recession. The Chinese index, what we have the yuan that is confirming and continuing its stabilization phase after yesterday. It closed at the same level of Friday. And today we had the news on Europe where finally the IMF said that they will like to participate in the bailout package of Greece of $86 billion. The Euro finance ministers on Friday voted for the bailout package, and the German parliament will have to vote on the bailout package during this week. The German Chancellor Angela Merkel said that there is no way that we're going to erase Greece's debt. We're going to forget that. So definitely, Greece will have to pay its debt. We'll have to push through some reforms. If you want to know the type of reforms that the Greek government will have to implement, I advise you to go to our Facebook page. We have published an article on the reforms that have already been passed and the ones that should pass again to get access to that $86 billion package. So folks, as I said, we have markets where in terms of the news are okay, not so bullish, not so bearish. Of course, it's encouraging for what's happening in Europe, but nothing major there. In terms of the data that we had today on the U.S. side, now let's take a look at the U.S. indices. We had the manufacturing data from New York, and it's actually a big decline, minus 14, and we're expecting an increase of 4. So this is definitely a negative for the manufacturing data of New York. But usually in that data, what I found is that estimates, there tend to be a big gap between what estimates and what the actual reading is. What we had today on the markets, we had some slight weakness, and finally markets have rebounded. And the fact that markets are still unable to break that support and continue to be stuck within that neutral formation, that continues to show the decisiveness of investors, because there's definitely nothing that's strong enough to bring the markets down. The US economy is still growing. The UN has stabilized. Yes, the Japanese economy has shrunk. However, we need another reading to confirm that it's in a recession. The Eurozone has accepted, the Eurozone finance ministers have accepted the bailout package. It's really likely that Germany will accept that as well, because there's a consensus among other Eurozone finance ministers. So really we're in a situation where we continue to be in between, even in terms of news and even technically speaking with the market, where the Nasdaq remains stuck within its Saturday formation. Same thing too for the Dow, same thing too for the SPY, and same thing too as well for the TSX. Actually on the TSX this morning, what we had a slight bullish momentum on the gold sector that has faded, but right now gold continues to stay neutral. I think the gold sector is still a sector that you have to watch, though. There's several stocks that could break out in the gold sector. However, we're still neutral, all right, testing this downward trend. So to confirm a new bullish cycle in the gold sector, we need gold to go above 107, 108. For the gold sector, we need the sector to go above 140. So for the sector continues to remain neutral. Now, in terms of the stocks that could break out, well, what we have done, we saw this Barry Gold that could break out. It's still testing its downward trend, still neutral. So Barry Gold could be next in the line. There's Yamana Gold also as well that could break out. If ever the stock can go above 309, 310, it will also reverse this downward trend. So gold stocks are definitely right now in a situation where we could have a potential breakout. Now, should you open some positions in the gold sector knowing that a lot of those stocks are neutral? I think there's still a lot of risk on the gold sector, especially with not knowing what the Fed is going to decide in September. Will they raise interest rate or not? If they raise interest rate, well, this neutral formation that we have on the gold sector will turn out to be into a bearish cycle, because if they raise rates, it's going to be negative for gold. Now let's take a look at the energy sector. We have oil here that is unable to pursue its decline. So oil, it's stabilizing at the low of this downward corridor. This is why we didn't recommend any new short positions in the gold sector on marketgurus.tv that you can have access for free for 10 days on Friday when we had this decline in oil. If you take a look at the energy sector, yes, there continues to be some weakness, but do we have several breakdowns in the energy sector? If you take a look at some breakdown that we have on the Canadian side on the energy sector, well, let's take a look at this here. Do we have a lot of stocks in the energy sector? Not that much, though. We have actually no one in the energy sector that are breaking down. If we take a look at this, we still have Kelt Exploration that is testing its support, not able to start any new breakdown. However, if it goes below 630, though, that would be definitely negative for Kelt, because we'll break an important support on a yearly basis. Elsewhere, do we have other stocks? Not so much. There's maybe Prairie Sky, but Prairie Sky pays a dividend, so if you're shorting that stock, you can be impacted negatively because those stocks pay dividend. And when you're shorting a stock, you are the one who pays the dividend. You're not receiving it because you're shorting the stock. Now, Verisan is could be next in the line to start a potential breakout, but it's only an exception. So really, it's a situation where to stay on the sideline continues to remain the best strategy. Let me show you some stocks that we have in our analyst shorts portfolio on marketgurus.tv. We have Intel in our analyst shorts portfolio. We recommended that stock as a buy. There was some weakness at opening in NASDAQ, but finally the NASDAQ index rebounded, just like Intel did. And if we take a look at this, Intel, so far, as long as it remains above that support, there's no reason to get rid of that position. Pilgrim's made an attempt to start a bullish cycle, but what we did on that stock here, we take a look at the 30-minute 250 period, and what we saw that even when the stock confirmed that breakout, we had a histogram that was confirming a negative top. A stochastic, sorry, not histogram, a stochastic that was confirming a negative top. So that was a clear bearish signal that we could not believe in this morning breakout. And this is what we should do though. Even if you're day trading, you're putting some chart with less data, sometimes what's important to do is to also put a long more period. So that allows you to have some perspective to see, okay, if I'm getting into that stock, into that breakout today at opening, what are the odds that it could continue? We have a first breakout, which is good, but we have a stochastics that's making a negative top. Not so great. Also, on this breakout, did we have a second uptick? We didn't, so we didn't have so. So this is why also that stock didn't perform well. So this is actually a key thing that will allow you to determine does a stock has a high probability of working out or not, and the Pilgrims didn't work out, and this is why we continue to hold on to that short position that we recommended here in our analyst shares portfolio on marketgurus.tv. In terms of news, we have some news on the Canadian side where we have some charters. They released their earnings. Tesla Motors, what they announced is that they have a company, Morgan Stanley, has raised their price target from that price $280 to $465 per share. So they're really bullish on the Tesla. Sun Navigation System, it's a company we have hosted before. They've built some device that allows you to track in real time what's going on in an airplane. Finally, they signed a deal with a major Asian carrier, and they are recognized as the official supplier because the technology works. BCE, they sold their stake in Globe and Mail, 15% of their stake in Globe and Mail to the Thomson Reuters family. Snip Interactive, they signed a master agreement. Sabudo, what they said is that they will buy back some shares because they made some previous agreements before and they had to issue some shares. So what they're going to do, they're going to buy back those shares, try to cancel those previous agreements with former sellers. And Keek, what they announced is that, first of all, they made a private placement of units of $1 million, and they also signed a technological contract with Personas.com Corporation. So Keek, yes, it's surging, but in terms of day trading in Keek, nah, definitely not. Now, it's at an important support Keek, confirming a higher top on the stochastics, which is actually bullish, but Keek could reach 32 cents. So really a short-term trade in Keek. Would you get into that stock today? That could be a possibility with the 25 cents, 26 cents as your exit point on Keek.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. I just want to highlight here there's a slight movement that we found on the airline sector, but it's a movement that was due to the weakness that we had in oil earlier during the day, but we see this weakness is not continuing with as much strength. So therefore, even if the airline sector going down because oil is declining slightly, folks, first of all, technically speaking, you see that we are almost at the top of this upward corridor. So target becomes around 251, which corresponds to that former resistance. But there are some breakouts I wanted to highlight to your attention. A stock like American Airlines Group, clear breakout. However, one thing I would suggest you to do is that when you have a stock like that is breaking out, that has been battered by the market, first thing you have to take a look at is to see, okay, we're breaking a resistance. Now, what are the moving average saying? We see that the 200-day moving average is meeting the stock around 44.30. So not much room to go. Another thing you could do, you could put the Fibonacci retracement from the top to that bottom, and you see it also corresponds to the 38.2% retracement, this 200-day moving average, which is in green. So that shows that at those levels, we might definitely have a pause. If ever we don't, well, next target becomes at 46.87. So that's what you could use. And first of all, the moving average and the Fibonacci retracement to help you determine when you're buying a stock at a bottom, how far could it go? And American Airlines Group, we saw that the upward potential, you didn't have a 10% upward potential. There's Alaska Air Group, which is well, we could consider it as a breakout, but I mostly consider it as a pursuit of the bullish cycle, right, for that stock. Now the stock is like testing the top of this upward corridor there, right? So for me, it's not a buying signal, but you could trend trade that stock, which means that you would buy it and hold on to it as long as it maintains upward trend, willing to tolerate a correction, and therefore $75 would be your exit point. Virgin America, not breaking out yet, but $34 is your exit point on that stock. United Continental Holding, next on the line to potentially start a breakout. But look, there's another top that's there at 63. So we definitely do not have conditions where a lot of stocks are active for a day or swing trading, right? Some stocks could break out, but it definitely continue to remain minimum. In terms of the Canadian sector, well, we saw gold, where several stocks continue to be neutral, like Osisko Gold, Pritchard Resources, or Alamos Gold, but therefore we still don't have any new breakouts. For the silver, might be a little bit more interesting because we have Silver Standard, which is breaking out. It's an exception. So yes, that stock is an exception. I think definitely you could give it a shot with an exit point, let's say towards $8 if we go below that former resistance. So $8 is your exit point on Silver Standard Resources. Silver Wheaton next in the line to potentially start a breakout higher than $19. However, if it goes above $19, we still see that at $20, that would be a target because that will correspond to this downward trend. But from $19 to $20, there's some money to be made on a stock like Silver Wheaton. Now, on the mining sector, continues to be some weakness, but take a look at this. We still have Teck, a big player, that it continues to remain neutral, unable to start any new bearish cycle. And same thing but First Quantum is the opposite, going down. Same thing for Hudbay Minerals. So Teck is resisting, but other major caps, First Quantum, Hudbay Minerals, are all pursuing their decline. And even our financial sector, though, so far, we still see that the sector is testing the low of its downward corridor there. And there are no breakdown on the sector, but mostly a pursuit of the bearish cycle of banks like CIBC, which are heading toward the bottoms of July. So that definitely might be the point where that might trigger a rebound. So far, let those stocks go down, and around those points, that would be a sector or some stocks that you could potentially buy. Elsewhere, for the industrial sector on the Canadian side, we have a neutral sector where no stocks are really moving. Most stocks are putting some pressure on their support, and none of them are starting any new bearish cycle. So it continues to be a boring market where you should stay on the sideline. Gold stocks, some of them should be put on your watch list, but none of them are breaking out yet. I would avoid getting in the gold sector ahead of the Fed decision in September, if ever they're going to raise interest rate or not. If they raise interest rate, it's bearish for gold. And elsewhere, we think that so far for day trading, there has only been one opportunity that stood out. It was this stock here, Sprint Nextel, that gave us a nice entry point. So Sprint Nextel has been our day trade of the day with those 3 entry points. Next entry point is 477. But another stock you could watch that could be active during the end of the day could be AMCN. So it started to have some buyer's momentum there. So $5 is going to be the new entry point on AMCN. So it's the stock to be watched that could be more active during the end of the day compared to Sprint Nextel, where we believe that the stock will not give us new entry point so far. So see you tomorrow on the Swing Trading Show on decisionplus.com, and have a good trading.